Welcome to Purdue Commercial AgCast, the Purdue University Center for Commercial Agriculture's podcast featuring farm management news and information. I'm your host, James Mintert, Emeritus Professor of Agricultural Economics at Purdue University. And joining me today is my colleague, Dr. Michael Langemeier, Director of the Center for Commercial Agriculture and also a Professor of Ag Economics here at Purdue. We're going to review the results from the May 2025 Purdue University-CME Group Ag Economy Barometer survey of farmers from across the nation. Each month, we survey 400 farmers across the U.S. to learn more about their perspectives on the ag economy. This month's Ag Barometer survey was conducted from the 12th through the 16th of May. And Michael, the barometer rose 10 points this month to 158. That's the highest barometer reading we've gotten since May of 2021 and continues the trend we've had of strong barometer readings ever since the election last fall and to some extent maybe dating back to October. The current condition index rose 5 points to 146. That's the highest current condition index since December of 2021. And of course, the biggest move was in the future expectation index. It was up 12 points to 164. That's the highest future expectations index since April of 2021. So the biggest reason the barometer went up was because people became more optimistic about the future, but they also became a little more optimistic about the current situation on their farms and in the U.S. ag economy. I wasn't surprised that the barometer went up, but maybe the magnitude of the jump was a little bit surprising.
Yeah, I'm in the same camp. I wasn't surprised it went up. During the week we were asking this, there was some good news regarding tariffs with respect to China. I don't know exactly what the timing was there, but it certainly was during that week. And so I think that played into the optimism we saw in this month's reading. I'm still surprised, however, that the index of current conditions is as strong as it is. That also went up 5 points. So that was a little surprising to me.
Yeah, that's sort of my take. And again, this administration continues to have these short-term delays in implementation of tariffs, and that seems to give us this bounce in terms of expectations, not just in our index, but also in other indexes, right? You see it in the stock market elsewhere. So you get these very short-run responses, and I think we definitely picked up some of that this month. The Farm Financial Performance Index was up 8 points to 109. That's just 2 points lower than it was back in January. And again, it's the highest index reading since December of 2022. And, when you look at the chart, you can really see how that change has taken place going back to last fall. You go back to September, that index was at 68, and now we're at 109. So we've really seen this dramatic improvement in that Farm Financial Performance Index. Some of that relates to 2025 expectations versus 2024 versus, last fall, people were comparing 2024 to 2023, I think. But still, I don't know, a little optimistic, isn't it?
I think so, but I do think 25 is going to be as good as 24. And so when I look at budget projections, for example, I think it's fairly consistent with the budget projections.
Okay. And you've said that before. I guess, overall, I just continue to be a little surprised at the optimism we're picking up.
That doesn't necessarily mean this is going to be a good year, but what that tells me is they think it's going to be similar to 24.
Yeah,
and I would agree with that.
And that's how the question is phrased. So that's a good point. The Farm Capital Investment Index did fall this month. It fell 6 points. But that was still pretty strong relative to the last 3 years. You go back to this time last year, we were at 35. 2 years ago, we were at 37. 3 years ago, we were at 35. You really have to go back 4 years to see the kind of values that we're seeing on this index right now. In fact, going back to 2021, you'd have to find a May reading higher than this year's reading. So the fact that it fell a little bit isn't too surprising to me. I guess the key point is it's still above what I consider to be the trading range. That the upper bound of that trading range for the better part of 3.5 years was about 50, and we're still above that. So I guess I don't see a big change there. What's your take, Michael?
Yeah, I don't either. I mean, this thing does a little seesawing back and forth, but again, the surprise is that it's as high as it is.
When you look underneath to figure out why the index changed, the percentage reporting good time to make large investments fell from 25 to 19%, while the percentage reporting bad times was unchanged at 64%. So that's what caused the index to move. So you did see a little loss of optimism about this being a good time. I don't know, maybe a little bit surprising given the bump we saw in future expectations. So those two, maybe I would have expected to see a little stronger correlation, but still, that's what took place there. Um, the interesting thing is, if you look at the last several months and look at the question that says, what are your plans for farm machinery purchases in the upcoming year compared to a year ago? There has been a little bit of a drift there. And going back to February, the percentage of people who expect to reduce their farm machinery purchases in the current or in the upcoming year compared to a year ago has been drifting lower. Back in February, it was 54%. We're going to pull back. Been drifting lower the last couple of months. This month, it was at 48%. The percentage saying that they're going to hold their investments about the same has climbed from about 36% back in February to 43% these last 2 months. So in a way, I think that's a little bit consistent with the strength we've seen in the capital investment index, don't you?
Yes, I do think that's consistent, and the May numbers were very similar to the January numbers. I found that rather curious, but they were. And
Yeah.
so it looks like we were a little more negative in February, March, and April, and now they're just a little bit more positive, consistent with where they were at in January.
So it remains to be seen if that's going to have any impact on things like tractor sales. So far, certainly in the first quarter of this year, that was not the case. Longer term, it'd be interesting to see what takes place there and whether or not there maybe is a little bit of moderation there. If there's one number on the survey this month that surprised me the most, it's probably this one, Michael, and that is the short-term farmland value expectation index. It jumped 14 points to a reading of 124. That's the highest index for that since a little over a year ago, March of 2024. And, I'm just kind of surprised that people's expectations for farmland values would change that much in 1 month, given the news that we had and what took place. How about you?
Yeah, usually this is very consistent with the index of current conditions. It was up slightly, so I would have expected this to be up slightly, but not as much as it was. I mean, that's a big jump.
Yeah, and if you look at the question that index is based on, which is basically asking people about their farmland price expectations for the next 12 months, the percentage of producers who expect higher farmland values this month jumped from 25% in April to 37% this month. And that shift occurred with people moving away from the expecting values to hold steady category into that expecting values to increase. The percentage of people expecting values to hold steady dropped from 60 to 50%. So it's not like people flipped from negative to positive. They flipped from percentage holding steady to becoming more optimistic. So I guess maybe in that context, it's a little more understandable, but still a pretty big jump.
Yeah, really big jump.
We've been asking this question all the way back to 2019, and we've talked about it not every single month, but periodically here about the lack of optimism people have about ag exports. So the question is, over the next 5 years, do you think ag exports are more likely to increase, decrease, or remain about the same? And for some time, people have, over time, become less and less optimistic about exports increasing. That changed this month big time. The percentage of people who say they expect exports to increase over the next 5 years in May jumped to 52%, up from just 33% a month earlier. That's the highest percentage expecting exports to increase since November of 2020.
This was a truly amazing result. I did not expect this. I expected it to be a little bit more positive, but not this much. And just to put this in perspective, if I'm reading the chart right, Jim, there was only one time during the Biden administration where the increase, the people that said it was going to increase was over 50%. One time, and now we're there today, and it just goes back to what we've been saying before. I think we're in a more challenging environment for agriculture exports than quite a bit of the time during the Biden administration, but maybe that's just me.
Well, the interesting thing is this dramatic turnaround, because if you look at the chart that we've got in our report and in the online chart library, you can see there was this long-term downtrend dating back to 2020 with respect to people becoming progressively less optimistic about growth in exports, which historically have been an engine of growth for U.S. agriculture. And this is the most dramatic 1 month turnaround in that data set. So it's I guess what it demonstrates to me, Michael, is that we are in an environment where sentiment on a variety of topics is heavily influenced by the headlines of the day.
I think that's a good way to put it.
And we're seeing that in other markets as well. I mean, the stock market is certainly evidence of that as well. So people are very influenced by whatever the headlines are. And as you pointed out earlier, this was a week when people became more optimistic about trade and more optimistic about markets in general. So we included some questions this month to try and learn a little bit more about people's perspective on free trade in general and tariffs. And so some of these were questions that we originally posed back in 2020, so it provides kind of an interesting comparison. So the first question is, how strongly do you agree with the following statement? Free trade benefits agriculture and most other American industries. So a majority of producers across the board, we asked this 3 times in 2020. We asked it in October, November, and December of 2020, and now here in May of 2025. A majority of producers say they think free trade is beneficial, but when you compare the results this month to 2020, a higher percentage of producers say they disagree that free trade is beneficial. So, for example, in May of 2025, it was 18% who say they either disagree or strongly disagree, versus 7 to maybe 12% who felt that way in 2020. And so to me, that's the difference between these what we picked up in May versus what we picked up back in 2020. There's not as much agreement that free trade is beneficial, or stated another way, there's more people saying it's not beneficial.
Yeah, there is more people, certainly, like you said, there's more people think strongly disagreeing or disagreeing with this statement, 18% compared to 12% back in November 2020 and lower than that in October and December of 2020. But really stood out to me, one of the things that really stood out to me is 28% strongly agreed with this statement in May. That was close to 50%. When we asked this in October, November, and December, and so there's certainly a much fewer people that strongly agree with this statement. Now, we specifically use free trade here and not fair trade. I think it's important to point that out because I do think there's different connotations between those two terms.
Yeah, that's a good point, and I agree with you. I think when you look at the chart, that is quite noticeable. The fact that we have a much lower percentage who strongly agree. So we've been asking this question now for the last couple of months. This is the 3rd time. What impact do you expect the U.S. government's imposition of tariffs on imports will have on your farm's income in 2025? And compared to March and April, fewer producers in May said they expect a negative impact on farm income from the U.S.'s use of tariffs. If you look at the numbers, I think this month it was 43% who either expect a very negative or a negative impact. Last month it was 56%. When I say last month, April. In March it was 57%. So fewer people are worried about the impact on their farm's income than what we were looking at before. It's still a large number, but it's less than half.
And this certainly helps explain what happened to the index or current conditions.
Yeah, it picks up some of that improvement and optimism. We've been asking this question for quite some time, so I think it's worth sharing. Looking ahead to next year, what are your biggest concerns for your farming operation? No big change this month. I mean, number one continues to be high input costs. This month, it was 37% of the people in the survey said that was their biggest concern. Number two was lower crop and livestock prices at 23%. We did pick up a few more people worried about interest rates, which I think is consistent with what's taken place in the markets, right? With some jumps in interest rates, people a little more worried about that. Availability of inputs was at 8%. That's been as low as 5%. It's down slightly from last month. We've been picking up some concern there, a little bit more on the environmental policy side, 9% this month. I think last month it was around 6%. So no big shifts there, but what's your take?
Yeah, I know no big shifts there, and higher input costs remains the number one, like it has been for months.
Yeah, I think the one to watch in this list is probably rising interest rates.
Yes.
And maybe availability of inputs. Well, you agree with that?
Yes. And just the fact that we have to remember what this looked like prior to COVID. We didn't ask this question as frequently. We did ask questions similar to this prior to COVID. Prior to COVID, input costs would have not been high on that list. I mean, ever since COVID, input costs, higher input costs, and interest rates have been really important. Interest rates obviously more recent, but those remain the two of the most important items that are concerns to producers.
Yeah. So we've been asking people periodically about how important it is that a new farm bill be passed in the current year, and this time it's obviously 2025. 2 months in a row, just over half of producers have said the passage of a new farm bill is either important or very important. This month, I think it was 71%. I think last month it was either 69 or 70%, so very close. So a substantial majority of producers think it's important that a farm bill be passed. And then this month, the new wrinkle was we did ask people about PLC reference prices. So with respect to both corn and soybeans, we said in a new farm bill, do you expect the PLC reference price for corn, which is currently $4.26 per bushel, to be unchanged, increased, or reduced? And we asked the same question with respect to soybeans. Do you expect the PLC reference price for soybeans, which is currently $9.66 per bushel, to be unchanged, increased, or reduced? And when you look at those results, well, I'll let you summarize. What do you think?
I think they're consistent with the information coming out of Washington D.C. Some of the bills that are working their way through Congress. I think they're consistent with that. But I want to go back to the farm bill question. Given the policy uncertainty that we're currently seeing, I've been telling people, reporters, and others that are interested in the Ag Economy Barometer, that I can see why they think this is really important. We need that safety net. We need that multi-year safety net to kind of mitigate some of the policy uncertainty we're seeing with respect to monetary policy and trade policy.
Yeah, stated another way, they're looking for a backstop.
They're looking for a safety net.
Yeah. And what do you make of the reference price responses? So to summarize, 39% said they expected the corn reference price to increase, and 43% said they expected to see the soybean reference price increase. I'm going to round those off and say roughly 4 out of 10 people think that those two prices are going to go up in the upcoming farm bill.
What's really interesting about that, if 426 corn, for example, we're still a little bit below the average corn price since 2007, but not that much below. I think the average corn price in the U.S. since 2007 is about $4.50. And so to me, we're getting awful close to that average price. And I mean, back in my policy classes, you got to be careful there on how do you incentivize producing certain crops, and particularly when you compare these two. I think people could argue under the old farm bill that the reference price for soybeans is probably too low compared to corn. And so to me, you can make a stronger case for the increase in soybean prices than corn prices. But I think you're gonna be mixing up signals here in terms of planning intentions if you increase corn and soybeans and then some of the other reference prices.
We've been down this path multiple times in U.S. ag policy. When you raise those reference prices, target prices, et cetera, and the mechanics are always a little bit different in terms of how the programs work. But when you raise those too high, set those bars too high, you can create some challenges with respect to building up inventories, right?
Yes.
So that's obviously the concern. So with all the talk about restrictions on immigration or lower integration, we decided to ask some questions about that with respect to what impact it might be having on farm labor. So the first question was, do you normally hire non-family members to work in your farm operation? And roughly half, 51% of the people in the survey said yes. So if you said yes to that question, you received a follow-up question, which was, are you having or do you expect to have difficulty hiring adequate labor in 2025 for your farm operation as a result of the U.S. administration's policy to reduce immigration? And there's two ways of looking at this, Michael, and I think before I present the results, I'm going to remind listeners of who we survey. We survey producers of the major crops, corn, soybeans, wheat, and cotton, and we survey producers of livestock that produce, for example, hogs, beef cattle, and dairy. We do not intentionally survey specialty crop producers. Now, we do get some of those folks in the survey, but it's because they produce one of those other commodities. So with that introduction, I'll tell you that 74% said they were expected to have no difficulty, but 26% said they would have or expected to have either a lot of difficulty or some difficulty. A lot of difficulty was 10%, some difficulty was 16%. So, Michael, you and I were talking about this earlier. That might be the more significant part, given who we're surveying, the producers of major crops, major livestock enterprises. Roughly 1/4 are expecting to see some difficulty in hiring labor.
Yeah, that seems high when given the fact that quite a few of these farms probably have very few hired employees. I mean, we this question obviously went to those that do have hired labor, but quite a few of those people probably only have one, two, three people. So the fact that a quarter of them are having some difficulties probably fairly high.
Yeah, I mean, we'll probably ask this again. Oh, I think we will ask it again and kind of see how it looks as we progress through the year. But yeah, that's at first glance when you say 3/4 no difficulty, you think, well, okay, not a big problem. But then you start thinking about who we survey and the fact that it's really more likely to have an impact on specialty crop producers, especially. The fact that we've got 1 out of 4 saying some degree of difficulty, that's.
Yeah, and if a person has one or two hired employees and you lose one, you have a lot of difficulty. That's a pretty big challenge for a farm in that situation.
Yeah, good point. Okay, so the last question is one we've been asking now, I think, a couple of times now. So, do you expect the increased use of tariffs by the U.S. to strengthen or weaken the U.S. ag economy in the long run? So 2 months in a row now, April and May, we've got almost identical responses. In April, 70% of the people said they expect the use of tariffs to strengthen the U.S. ag economy in the long run. This month in May, it was 69%, so really no change. So a large majority of people think this will have a positive impact on the U.S. ag economy. That does not include. I don't know anybody in the ag economics profession that agrees with that, but that's what producers are telling us, right?
Yeah, I personally don't agree with this, but that I think that explains why we have the highest index of future expectations since April 2021. If you really believe this, you're pretty optimistic about the long run.
You know, and thinking about why people might respond this way, it appears that they think the use of tariffs as a negotiating tactic is going to wind up in a favorable outcome. Is that fair to say?
I think that's right, but again, we've talked about that before. I worry about long-term market share and what that does to the confidence of people that are buying our products. That I really worry about that.
Yeah, I think we both worry about that, but I think what we're picking up in the survey is this idea that as a negotiating tactic, it will wind up opening markets.
We're going to get better deals.
It will wind up opening markets because we've always had some difficulty with some countries with respect to import limitations. And I think we're picking up this expectation that those will be relaxed because of the use of this policy. So it's an open question as to who's right.
Time will tell.
Yeah, it's an open question as to who's right, but that's what we're picking up in the survey. So that wraps up the highlights of this month's survey. You can get the full report on our website, purdue.edu/agbarometer. Of course, you can listen to this podcast not only for the summarizing the results of the Ag Economy Barometer, but also lots of other farm management news and information topics on the Purdue Commercial AgCast. On behalf of the Center for Commercial Agriculture and my colleague, Dr. Michael Langemeier, I'm James Mintert. Thanks for listening.